Hey, what's going on everyone? Thanks for checking out this video. My name is Travis from Master the Market, and this is going to be a quick video talking about some of the best day trading indicators that you can use to actually improve your day trading. Now, the first one that I want to go over is known as the Relative Strength Index, but most people just call it the RSI. And by definition, what the RSI is a momentum indicator measuring the magnitude of recent price changes to determine when a stock is overbought or oversold. A stock can be considered overbought after it has a very strong move to the upside, and oversold when it has a very strong move to the downside. And oftentimes when there is a significantly overbought or oversold level, that's when the stock is going to reverse to the other side. So for example, if there's a stock that is very oversold, has a very strong move to the downside, and the RSI is very low, that can be a good indicator that the stock is going to bounce back up in the near future. And because of that, you can use it to potentially buy into the stock and profit from that reversal to the upside. And if we take this example here, we can see that we have a chart and we're looking at the RSI down here at the bottom of the chart. And what this is a scale from 0 to 100. And by default, you can see that 30 and 70 are emphasized here on the RSI. And that's because those are the levels that are considered overbought and oversold. So anytime the RSI gets to 70 or higher, that's when the stock is considered overbought. And anytime it gets to 30 or lower, that's when the stock is considered oversold. And if we compare what we see on the RSI down here to what we see with the chart up at the top, you can see at the first time the stock is overbought, it seems to consolidate a little bit and it does have a small pullback. But later on, when it becomes overbought again, we see a very strong sell-off to the downside there. It bounces around for a little bit, it pulls back, and this is where it becomes oversold. Exactly at the same time it becomes oversold, that's when it then bounces back up, becomes overbought again, pulls back, oversold, and is starting to bounce back up. And this is a very common pattern of going from oversold to overbought, and then from overbought to oversold. So you can see how if you're a short-term day trader, you can use these overbought and oversold levels to profit from these reversal points in the market. All right, now before moving on to the next indicator, I want to go over to Thinkorswim real quickly, just to show you how you can actually add the RSI onto your charts. So this is going to be a very similar process if you're using a different platform as well. But what you want to do is go up to Studies, click on Edit Studies, search RSI on the left side, and then simply add this to your chart by clicking Apply or OK. And now you can see we have the RSI down here with the default 70 and 30 overbought and oversold levels. And from there, you're ready to use this for your trading. Now, while we're over here in Thinkorswim, I want to show you how you can actually find stocks that have been recently oversold in the market in real time. So that way you can actually take advantage of them and look to buy into them to profit from their potential reversal to the upside in the near future. And to do that, you want to go to the Scan tab up here. And again, if you're not using Thinkorswim, if you're using some other kind of scanner, you're going to be able to put in the same or very similar criteria to find similar stocks with the same setups. And I'm going to go ahead and pull up this scanner that I already have made, and I'll show you what you want to put in so that you can make the same scanner as well. The first thing that I have is simply the mark, and that's going to be the price of the stock. And I have my preference as $1 to $20 per share. But if you prefer trading higher priced or lower priced stocks, you can of course feel free to adjust that. Number 2 is the volume. We want a minimum of 100,000 shares, just so that way we know there is enough liquidity in these stocks so we don't have any problems buying or selling them. And number 3 is going to be the custom RSI study. And to do that, you click on Add Filter up here, click on Study, and once that pops up, you want to go over to Custom. And with Custom, you're going to go ahead and click on Edit the default. And up here in the left side, make sure that you have Study selected, search for the RSI, and then go ahead and click on that. Keep everything on the left side here as the default, and we want to select that the RSI is less than the value of 30 because we know 30 is when the RSI starts to become oversold. And now anytime the RSI of a stock within the past 5 bars has been at 30 or lower and it meets all of the other criteria in our scanner, it's going to pop up on the scanner and be a potential trade in the near future. So with all that being said, I'm going to go ahead and click on Scan. And now these are all of the stocks that meet that criteria. So if we search for Gene now, because that's the number 1 stock that popped up on this scanner, we should see that the RSI sometime within the past 5 bars was oversold, being less than 30. And you can see that right now the stock is actually oversold. Its RSI is at 29, and because of that, we know that this is potentially going to bounce back up in the near future. Now, with that being said, you don't want to just buy into these blindly just because they're oversold at the moment. You want to wait for some other sign of a reversal, and you want to try to pair as many indicators together to give you the best edge in the market and the highest chances of a profitable trade. Okay, now one other quick tip to actually avoid having to bounce back between the scan tab and the charts tab, or the scan tab and the trade tab, is to just actually pull up your scanner on the left sidebar over here. And the way that you do that is by having a watch list on your sidebar, and then by default, it's going to have some kind of default watch list. And what you want to do is save the scanner that we just made, give it some kind of name like oversold RSI, and then go to your scanner over here and add that into your sidebar. So now all of the stocks that meet the criteria in the oversold RSI scanner that we just made are going to be right here on the left sidebar of our screen. So whenever you're doing some analysis or trading, you don't have to go back over to the scan tab to see what's popping up on your scanner. It's going to be right there for you and is going to hopefully help you save some time. Now the next day trading indicator that I want to talk about in this video is what is known as the VWAP, which is an acronym that stands for the volume weighted average price. And simply put, what this does is gives you the average price that a stock is traded at throughout the day. And when you think about the average in the market, you probably already think about a moving average. And in reality, the VWAP is very similar to a moving average, but the only difference is that moving averages do not take into account volume, they only take into account the price of every trade. So because of that, the VWAP is pretty much just a moving average that is weighted by volume. So if we take this example here, we're looking at the VWAP as the red line throughout the middle of the chart. And you can see that it is, of course, affected by the price of the stock, because as the price of the stock goes down, the VWAP is also going down. And as the price reverses to the upside and starts to trend higher, the VWAP does the same. However, again, the difference between this and a moving average is that this is also going to be weighted by volume. So what I want to point out is that if you look at the volume lines at the back of the chart represented by these blue bars, and if we take this big spike in volume here, for example, we can see that this happens well below the VWAP price. And at the same time that we get this big spike in volume down here, the VWAP starts to really come down. And that's because, again, the price is well below the VWAP and there is a big spike in volume. And the price and volume are the two things that are going to affect where the VWAP is at. So then you can see as the volume starts to flatten back out, the VWAP starts to do the same. And as the price spikes up above the VWAP, again, we get another spike in the volume right about here, and that's exactly where the VWAP starts to curl back up, following the trend of the stock. Okay, so that should give you an idea of how the VWAP actually works and how it's going to move in real time. But now you're probably wondering how you can actually use this to improve your day trading. And with that being said, the main way that the VWAP is used is simply as a line of support and resistance. You can use a line of VWAP support and VWAP resistance the same way that you would use any other line of support and resistance in the market. So that means, for example, if we look on the left side here at this VWAP support, because we know that a support level is a price where the stock is going to have a hard time breaking below, that can be a good spot to buy into the stock and profit from this upward momentum in the market. And there's multiple occasions here with this example when the VWAP is acting as VWAP support, where you could buy into the stock and profit from this spike up in the price. And we see pretty much the same thing happen over here with the VWAP resistance. In this case, because it is trending down, the VWAP is above the price of the stock and it's acting as a level of resistance. So if you were in the stock, you could use the VWAP resistance to sell out and lock in your profits or cut losses on your trade. Or alternatively, if you weren't in a position, you could actually look to short sell. For example, you could short sell into the VWAP resistance up here at about $7 per share. And in that case, you would actually profit from this sell-off that happens afterwards, and you'd be able to cover your short position down here in the low sixes and actually profit the difference between where you bought and sold. So it's just another way to take advantage of the market, but with short selling, you're simply selling high first, and then later on buying back those shares that you borrowed at a lower price to profit the difference between where you bought and sold. Okay, but other than the overall trend of the market, support and resistance are really the main two ways that the VWAP is used for intraday trading. And although you can use this on its own to actually have some really great trade setups it's going to be best when you pair it with multiple other indicators to give you the highest chances of a profitable trade. And that's going to lead us to the third and final day trading indicator that I recommend for all beginners, and that is going to be simply the price action itself. When I say price action, I'm just talking about real-time data, such as the level 2, the time in sales, and even the candlesticks on your charts themselves. Most people don't think of these as indicators, but at the end of the day, all of the other indicators are really going to be considered lagging indicators, which means they're lagging behind the real-time price action itself. So being able to learn the price action and pair it with another indicator such as the RSI or the VWAP is going to give you the greatest edge that you can get in the market. So if you're not very familiar with the level 2, the time in sales, and the candlesticks as well as candlestick patterns, I already have videos on my channel talking about those topics, so I'll leave links to those videos in the description so you can check them out after this video. But just to give you a quick example of how you can pair these indicators together, we see that we have the RSI down here at the bottom, the VWAP in the middle of our charts, and of course the price action is going to be represented in this case by the chart itself and the candlesticks themselves. So what I want to point out in this example is that as the stock gets well above the VWAP here, meaning that it's well above the average price that the stock is traded at throughout the day, at the exact same time that we actually see a bearish candlestick pattern form here. Now again, you may want to check out that video that I have on candlestick patterns to learn a little bit more about them, but this is actually a bearish candlestick pattern that we see forming right up here at the top of this move, and it's known as the hanging man candlestick pattern, indicating a bearish reversal to the downside, again at the same time that this is well above the VWAP, and at the same time that the price is starting to get very overbought. So pairing those three things together is going to tell you that now is going to be a good time to lock in profits if you're in a trade and sell out of your position up here, so that way you don't have to hold through this pullback that happens later on. And in my opinion, this is the best way to take advantage of indicators when you're doing your day trading, by just keeping it simple and using a few that really work well for you. It's best to keep it as simple as possible. You don't want to have a ton of different indicators on your charts, because at the end of the day, what it's going to do is really cloud up what's happening with the real-time price action itself, and you want to be able to use that as one of your day trading indicators. So anyway, thank you for watching this video. I hope you found it helpful and I hope you enjoyed. If you did, please make sure to give it a like and subscribe to the channel so you don't miss out on future videos. And if you're interested in taking your education on day trading, swing trading, and even long-term investing a step further, as well as have access to our exclusive market resources in our trading chat room with over 1,000 active traders in it daily, all of that can be found on my website, Master the Market, which is going to be linked down below in the description. Anyway, thanks again for watching. Good luck with your trading, and I'll see you in the next video.